You're listening to QSBS Solved, where we share insights for founders and investors looking to maximize their business's growth, exit opportunities, and tax savings. Our team at QSBSrollover.com offers specialized services to help you benefit from owning qualified small business stock. Our podcast guests are leaders in their respective fields and work on every side of the startup journey to help founders and investors win. The ideas and opinions shared here are not investment, tax, or legal advice. Reach out and we'd be happy to connect you with a qualified advisor or tax counsel. For now, enjoy today's episode. Hey everyone, welcome back to another episode of QSBS Solved. I'm here with a very special guest today, Mr. Matt Sherman, who is the founder of Arena, which is, let me back up. I'm here today with Matt Sherman, who is the founder of Arena. You can find him at mattsherman.com, and also I'll be investing at Matt Capital in the future. But Arena is a really innovative, very cool project that is essentially establishing a dashboard, a leaderboard for early stage founders and the progress that they're making in their companies. Matt, it's great to have you on, and maybe you can tell us a little bit about yourself and about Arena, and we'll dive in.
Yeah, it's great to be here. This is officially the first time I've ever talked on a podcast or any show about Arena. Hopefully in a few years, this will be a legendary show because it's I have a lot of conviction in it. But yeah, I appreciate you having me on. I guess a little bit about me. I am born and raised in Phoenix. I've been in the startup industry for about a decade. If you put the two together, you may make the assumption that Phoenix is not the best place in the world for startups, and you would be right. So I spent a lot of time, most of my time within my career on the internet, whether it's Twitter, building my newsletter, doing podcasts, essentially building my context in this world. And very long story short, I had a large portion of my career when I was helping companies get funded through a company that I started called Seed Scout. And I kind of saw how the industry works. I saw the best parts of it, the worst parts of it, and I saw an opportunity to fill a gap. Seed Scout, unfortunately, didn't work out. Happy to dive into it. I took a little bit of a break, got a job at Product Hunt, which I thoroughly enjoyed while I was there. But I recently left my job to pursue the next thing, and the next thing is Arena.
Yeah, I've seen you write threads about it on Twitter, and it's fun to go to the site and see the anonymous dashboard of founders and their companies, and people moving up and down the leaderboard to ultimately get introductions from you. So why don't you tell folks how that works, who can join and be, call it quote unquote, tracked, their progress tracked by the Arena leaderboard, and what it's trying to accomplish?
Sure. So the venture capital and startup world is seemingly inclusive, but explicitly exclusive, where it's like it's very difficult to actually objectively break in and get the relationships you need to raise money. You might think you're breaking in. I think there's a system makes you want to think that you're making progress, but you're just not. There's exceptions, but in general, like from my experience of working with thousands of founders, like it's very difficult. So Arena is kind of a no BS way to open the front door yourself, walk in, and compete for investor introductions. I will talk to you a little bit about what that means in a second. But the key here is like, well, if anyone can walk in, how is this high quality? The catch is that it costs money, $20 a month. The only way to sign up is you sign up for this thing, you pay $20 a month, and you're in. You get access to our AMAs, you get on the leaderboard, you get access to office hours with me, you're in. But the friction is you need to mentally decide that like you may not have everything you need to break into the industry, and this $20 a month is worth potentially increasing the odds. I think that's a really important point. We can dive back into it, later. But once they're in, essentially get their spot on the leaderboard, then they're able to give me updates every week through my system. They're able to show up to events, AMAs. We have events with Eric Reese coming up. We have an event with a tier one lawyer, I believe tomorrow at Goodwin. His name is Dane. We have these office hours where you can ask me questions about your fundraise, and essentially it's light access to me and everyone else in Arena. The leaderboard portion of it is, look, when I meet founders, I am thinking about one thing when it comes to investing in them or making introductions to investors, which is more common, which is how fundable are they? And it sounds really cringe. It sounds kind of, why would that be going through my head? But these founders are the ones that want to get funded. So I think it's a giving them a favor and being truthful. Oh, great, you want to get funding? Here's where you rank. So every month we take stock of this leaderboard, and for the top 1%, I'll probably expand this to 2 to 5%. So it's more than one person, but the top percent of the leaderboard will get introductions from me to investors. Now, what does that actually mean? Doesn't mean introductions. It means I have a lot of relationships. It means intro requests. So I will help them craft the blurb. I will send that blurb to, I haven't decided how many, per month. I'm still figuring some of this out. But essentially, I'll send these requests to investors, and the investors can opt into an introduction. They opt in, great, have fun, good luck. If they don't opt in, that's how this industry works. And now you're getting reps for that. So that's on a high level what this looks like. The leaderboard resets every month. Eventually, hopefully soon, I'll be able to start investing in at least one company a month out of the leaderboard. And once revenue grows, or as revenue grows, there's a lot of creative things we can do to really differentiate ourselves from not alternatives, because there's no one else doing that, but to kind of differentiate ourselves from just like what founders think they should be doing instead of joining Arena, if that makes sense.
Yeah, most of the founders on the leaderboard, are they pre-revenue, pre-product, or like what stage, when you say funding, are folks looking for? I assume pre-seed, seed.
So it's pre-seed, seed, but it's across the board. Some folks just have an idea and they're technical. They want to build context. Some folks do have revenue, tens of thousands of dollars a month, but they are missing the context needed to raise capital. The truth of the matter is that if you're an investor, it's different for everyone, but you might think the person who is just getting started with no revenue is more fundable than the person with 10K. Of course, there's going to be some investors that feel the opposite. So the goal for this is not necessarily to tell them how investors are going to react to their progress, but to, kind of have them understand how people think about you and get them in that context. So eventually they don't even need my check, or they don't need my intros. They can help themselves. I think that's the ultimate goal here. Eventually we want millions of people on the leaderboard. I'm not going to help millions of people, but I hope the millions of people learn through the program and through the system how to help themselves. That's the end of the day what I'm trying to get through.
Yeah, it's some of it's an accountability piece for progress too, because the way that the leaderboard moves is basically based on sort of an end of week blurb or bullet points of here's what we accomplished this week that team sends to you guys. Is that correct?
Yep. So that's 1/3 of what goes into the score. One other third is their effort that I perceive them taking, which is showing up to events, which is being interactive with me. That's a little subjective, but it's sure. If you're not showing up to anything, you're not learning, right? And that's not everything, but it is 1/3. And then the last third is just credentials. Do you have a good background? Do you not? If you don't, that's fine. It's only 1/3, but Silicon Valley really cares about this. And I think for a good reason. I used to not understand why credentials matter, but I do. And I do think if you are just like me, when I got started a decade ago, Arizona State communications grad, just like a complete nobody. I had no credentials. No wonder I couldn't raise funding for 4 years, right? That's just how it goes. So I kind of teach them that in their ranking. It's if you worked at Stripe, you're better off than someone that didn't. That's just true.
Yeah.
And I kind of communicate that through the rankings.
Yeah, and I think it's actually it's interesting because the process that founders are going through, even being a part of Arena, is sort of just a structured and maybe expedited learning process of what they would have to go through maybe over 3 to 6 years, but maybe they're able to accelerate that and do it and learn those things in 1 to 2 years if they've joined Arena. Is what
that's exactly right. That was actually the original pitch for Seed Scout. Seed Scout was a little different. We focused only on intro requests. So there was actually no knowledge, no context sharing. It was you join, it was more expensive. It was $100 a month or more, but you always got intro requests. And there were some issues with that model, clearly, because it's not around anymore. But I what you said is the exact truth. If we can take your journey that would have been 3 years and bring it down to 6 months, even though you think you're deserving of the outcome in 3 months, that is a win for everyone, whether the founders know it or not.
Yeah, some founders will say, "Oh, you're providing me intros. Who cares? Most investors aren't worth the intro." And anyways, what I care about is the high quality intros, or maybe some other metric that founder has come up with. What do you, what might you say to someone who's skeptical about hey, I can find investors online, I can craft a cold email, or I can, sort through and identify like who's my main target. What do you say to founders who are skeptical of kind of the model of, shots on goal, I guess, maybe, to getting in front of and getting the attention of investors?
Look, if you're able to get this stuff done without Arena,
Mm-hmm.
great. Like, you should absolutely do that. $20 a month, it's not super expensive, but it is money, right? And then it's attention you spend
Sure.
in this. So yeah, if you don't need Arena, I'm not going to be the one to sell you. But I think over time, as founders go across the journey and they understand what's actually happening, and this may take years, sometimes they realize, wow, like maybe that actually would have been useful. And obviously, Arena's only
Yeah.
been around for like a week, right? But I can think about
Sure.
for Seed Scout, it's like similar vein, right? It's like that happened a lot. It's like I met a founder, they're like, oh, I don't need this, like I'm doing great, and then even like a year or two later, zero progress on the funding, not much progress on the business, and they come in, and then sometimes they like raise money fairly quickly.
Yeah.
But it's not my job to teach a founder timing; it's their job. And also the last thing I'd say on that is I purposely made the business model like I did, I did it on purpose. So $20 a month, it's not a lot. It's really
Yeah.
not. I don't want it to be a thing where you spend this money every month and you're sweating around. Oh my God, there's this burn. This isn't working for me. I set it up where it's like you may do this for years, but you're not hurting your company while you're doing it, and you're only helping yourself. And some will see it that way and some won't, and it's not my problem if they don't. Either they will figure it out on their own, and I'm happy for them. Either they won't figure it out on their own and they come back, or they just churn out of the industry. And the most common outcome is 3, and that's fine because like I'm not trying to serve everyone,
Yeah, it's a coffee a week with a huge amount of upside potential and accelerated learning. So I like the idea.
One other thing too is like I actually got this yesterday, and it's tough. Like I empathize with the founders. There's a lot of like low quality stuff out there, like low quality help, low quality programming. I met a founder yesterday who reached out to me on LinkedIn, and he's like, "Hey, can you help me?" And I'm like, "Yeah, but this is how I work transparently." And they're like, "Oh, I've done paid things before. Can you just like make intros?" And I think that. And I get it. Like I'm very empathetic to the founder journey. Like I'm very empathetic. I've been there through Publoft. I helped hundreds through Seed Scout, and I'm doing it again. But it sucks because like I know my network, I know my path, I know who I've helped and how I've helped them and how much I've changed their trajectory. But it's like there's so many bad things out there that so many founders are going to see Arena and they're going to talk themselves out of it for reasons that are justified or not justified. And that's tough. But I just think that it's just if I just do this and it sustains and it helps a lot of people, those that will go away. But I will have to deal with the fact that there's a lot of programs out there that are just suboptimal, and I will be grouped in with those until proven otherwise. Which I don't think will take very long, but we will start there at least.
What does fundable mean? I know you have the metrics sort of that you track, but if you just distill down in really the simplest way that you could say, like, here are the 3 things that highest level you need to check to say, can I even start considering whether or not we might be eligible to accelerate growth with venture capital? What would you say?
Yeah, I think that so the first thing is technical, but this has changed over time. I think you got to be able to build your thing. It's okay if you're using AI or a cursor or something, or even Lovable, but you need to be able to build your thing. This is called leverage. And if you're raising money so someone else builds it, especially in 2025, it tells me more than I really need to know about you, and it just does. So I think you should be able to build your thing. I think you need to be high context, and this is the most important thing, and this is the thing that the least people are. They might have a great company, they might be technical, they might even have a good background, but they have no understanding of how the venture capital world works. They don't know who's who. They're following the wrong people. They're taking the wrong advice. They're making every mistake in the book. And this is 10 times more damaging than not being technical, although you should be technical. So you're high context. You have taken the time to learn how this industry works, how to fundraise, what are the soft rules, what are the hard rules. I think those are really important. And then third, and look, I will be the first to admit this is not fair. But like, yeah, this is a vibe check. Like if you are technical and you're high context, and you've gotten to the point where you are high context, the chances that you pass a vibe check are like very good. But there's a vibe check. And what is a vibe check? It's like, can we converse? Are you talking like a normal human? Like, can we get along? We don't have to be best friends, but like, are you able to interact with me? I believe I'm a very easy to communicate with person. I think I also have more empathy for the founder journey than probably most people on the face of the earth. Because also, look, I'm not like rich. Like I'm like, in some ways I've been very successful, but like I have equity in a lot of companies, but like I'm not like rich in my bank account, right? So it's like it's not like I'm out of touch. I'm grinding too. And I think that's like fairly rare with the same persona that I'm in, which is like VC adjacent. So I get it. So if you can't talk to me, or if you can't pass the vibe check with me, like I don't think you're going to pass it with someone else. And I am always happy to be wrong, which is why I have this arena thing. There's like there's many different ways to engage and get fundable and get to the top of the list. But those are the three things. Like you should be able to build your thing yourself, should be high context, and you got to pass the vibe check. And if you don't pass my vibe check, you got to pass someone's vibe check at least.
Yeah. Is there a I think a type of company here as well, because we're entering a stage where you don't need a truly technical founder. You need someone who can build their thing, like you said, but that's becoming different, right? It used to be there was only the technical founders who could, quote unquote, build their thing, but now you can build your thing and not be technical. So is that for you? Do you see that changing where today maybe we're saying, yeah, you need to be a technical founder too. You need to be a founder who can build, whatever that means. Whereas we used to maybe mean dev when we said technical.
So I don't think that the coding AI revolution has gotten quite out yet. I mean,
Sure.
It's out. Let's
in the next, say, 3 years from now, maybe where we might be. Yeah.
Yeah. So the reason I say that is I still meet more founders than you would guess that have no idea about any of this, and then like, they think they need to build or raise money to like hire an agency or like hire a CTO.
Yeah.
And they just like this is not on their radar. I would consider them not fundable, right? Because I probably they may pass the third box, but to be clear, like we might totally pass the vibe check, but if you don't pass the first two boxes, we can be friends, But yeah, no, I think it is changing. And I think if you know how to use Replit, you know how to use Cursor, you know how to use Lovable. I mean, that leaderboard, that's Lovable. That's Lovable taped into to Airtable on the back end. And I used ChatGPT to help me with the algorithm to sort it every week, right? So I definitely think like you do not need to be technical to be a builder. But still, ironically, most high context people I have met are doing AI coding if they're not actual technical, and most low context people I meet are not. So there is like a correlation there where if you are high context, this is almost so obvious. Why would you not be tinkering with this stuff? But if you're low context, you just may not even know what's going on, and that's fine. It just means you're not going to be top of the leaderboard.
Yeah. Well, you said that you've been sort of everywhere in VC and VC adjacent over the last several years, and obviously you've been building in the space and talking with founders for, I mean, even just your podcast, you've interviewed over 800-900 founders just publicly, right? That's just a public platform. The Bootstrap founder, how much more, like, where are you at in terms of your pendulum swinging back and forth between like reverence for the venture-backed founder versus the bootstrap founder? Because I've been talking to a lot of people recently who are increasingly bullish on build on your own, stay lean, this kind of thing. It's not a new trend. The last couple of years, we've coming out of that, high inflationary environment and excess. There's definitely a lean towards away from venture, maybe in some spaces. Where are you landing in terms of your philosophy?
It's a very good question, and one I'm actually, I mean, you don't know this, but like in the next, probably in my head, I actually need to write a post about almost an answer to this question because it has been top of mind.
Yeah.
I am under the belief, whether or not this is right or wrong, none of this is right or wrong. This is just it is a pendulum, I think, as you framed it. I think that the best founders don't raise money to like build a business. They don't raise money to get an exit. They don't raise money to make their personal dreams like come true, or to get rich. I mean, some do,
Yeah.
but the best founders are so obsessed with a problem in the world, or for the more delusional ones, not a bad thing, they're so obsessed with a vision that they have to solve a problem. Like they're more obsessed with the vision, sometimes good, sometimes bad, but they're so, obsessed with what they want to do that the only option is to raise money because the scale that they want to build it at and their vision is so big. Now, is this like that has its own issues? Like, let's be clear. But I think it's good. Like if you're a founder that you're able to bootstrap your company, you're making a few million per year. Like, look at me. I mean, like you're way more rich than I am, right? So it's I'm not someone that will ever frown on a company that's like printing money and making their founders and employees rich ever. But I do think there's a type of founder that is going for it, and it's this missionary type person, and it is kind of crazy. And I do think that the industry kind of perpetuates this. They make it where it's easy to be crazy, and they want you to be crazy. But I think my opinion on it is I get this for myself. Like I've taken the hardest paths that I could have taken in business, and I'm still on it. Like I'm literally trying to like essentially insert myself into the stack, like YC inserted themselves into the stack 20 years ago. Like that's literally what I'm trying to do. And I think I'm going to do it, but like there's way easier ways to make money, way easier ways.
Sure. Yeah.
But I'm trying to like solve something. So to go back to answering your question, I agree with you. Bootstrapping is in, not raising money is in, raising less is in. But my interest is will at least for now, and this could change, but right now it's like finding the founders that want to build a really big company, which by the way does not mean needing to raise $500 million or $1 billion. You can do that by raising a couple million or 10 million or 20 million. But I like the crazies, or at least the more crazies than not, for better or for worse.
Yeah, I mean that's one of the criteria for being fundable is, and you touched on it, but it's raising money for the right reason. Like if you're going out and saying, "Hey, I think I want to raise some money," but your top 3 reasons for raising that money are things that you should have been doing, figuring out how to do on your own before, doesn't give a lot of confidence that that's going to change after you've diluted yourself away. After now you have the expectations of a 50-person cap table, all that. So that feels like a necessary question to be able to have a good answer to before you go out and raise 10, 20, $30 million, right?
And on that front, like Arena is in some ways meant to like talk people out from raising sometimes. Of course, I'll never explicitly tell someone, but there's some people in Arena right now. It's already live. Like I haven't launched it, but we have like, I don't know, 20, 30 people in there. And there are some that I feel like should not be raising money. And there's 2 things that'll happen, because there are a lot of people that thought I shouldn't raise money for Seed Scout, and maybe I should have, maybe I shouldn't have. I actually don't know who's right? So instead of imparting my true opinion on them, I just get them exposure to people that have raised. I give them my feedback. I tell them what's good and bad about their deal or about what they're doing. And then they either prove themselves right or prove themselves wrong, because I'm not smart enough to know the future state of every founder in the world. No one is. So the point of Arena is not saying yes or no. It's like, go on this journey with me. Low stakes, $20 a month, and let's figure this out together.
Yeah, and how many startups who are around for 7 years fail versus startups who are around for 2 years? Like just staying alive increases your odds of success. And sometimes you need to raise $1 million or $2 million to ensure, in whatever way that your balance sheet works, that you are alive for long enough to increase the service area of opportunity, right? So yeah, stay alive is maybe the best advice that you can give someone, regardless of what they're deciding to do.
Totally.
Well, so you eventually want to, it sounds like, parlay some of this work into doing your own investing and deploying some capital into some of these companies. And is that your longer term vision, is to sort of this be a top of funnel to investments that you're personally making, or that you're making with maybe a fund structure or something like that?
Yeah, I don't know. Like I have always struggled with the concept of investing in startups. What I mean by that is there's a lot of investors in the world, And once a company's consensus, there's no lack of capital for them. And I think where there is mostly a lack of for everyone, except for maybe 0.01% of the world, is access to these investors. So when I started Seed Scout, my thing was no capital, no constraints, which essentially mean if I'm not managing capital, if I don't have a pool of capital I'm investing out of, there's no constraints on the amount of founders that I can help. And that's a little, altruistic. It's like kind of like, oh, find this guy, like look at this guy. But like I genuinely feel I genuinely feel that way. So I've been pushed by a lot of my smart and investor friends and founder friends to like start investing. So I have started. I've invested in a handful. They've done well. There's a syndicate that I'm doing, and I'm kind of feeling out how I feel about it. But I think my end goal is not to be this big investor. I actually think there's much more of a opportunity to do an advisor play. And as I'm tracking all of these companies and making all these introductions, I can see how they operate, who is interested, who's not, like who's interested for the right or wrong reasons. And then I can maybe invest once I have that data. But I do think the advising on the front end and giving up my social capital for them and making those introductions and being on the cap table as an advisor, I think is a much more interesting model. And I think that to kind of round this out, I would like to ideally build a machine where I can get equity in 100,000 companies per year and help 1,000 of them or more. Like, I don't know what the odds will be, but like 1,000 of them raise money, get markups, and kind of build this machine that kind of competes with the other accelerators. Like I'd like to like compete with the accelerator level of Silicon Valley and be more founder friendly and have a better deal than all of them. And that's what I'm trying to do.
Very cool. Yeah, this while you're talking, this kind of came into my mind, which is your perspective on once someone raises venture capital, in your mind, have they completely committed themselves to quote unquote, like building to exit at that stage? Even say $500,000 pre-seed or $1 million pre-seed.
Yeah.
Is that because I don't think a lot of founders recognize what kind of commitment that is or how that changes the way that you have to think about your business at the point where you're building maybe for, like maybe a lifestyle type business or raising capital maybe way longer down the road, but from sort of day zero, committing yourself to building to exit. What would you have to say about that? I mean, it's a significant decision.
Well, this question is a crux of like my whole career, at least since doing Seed Scout. I wrote a post in 2020 before I started Seed Scout called "How Expensive Is Y Combinator," and the post is still my most viewed post I've ever written. Still, 5 years later, and the thesis of the post is not about the 7% for whatever 2 million cap. It's not about their MFN, which didn't exist at the time. It's about exactly what you're saying. It's about they get these kids, not only kids, but a lot of kids, excited about building with Paul Graham and Sam Altman or whatever, and they get them to sign these safe and they get them on the track. And then most of the time they do raise a couple $1 million because that's what you do when you do YC. And then they're kind of on this track. And yes, they can always stop and get off, but that's difficult. And I don't think YC or any of these accelerators actually spend much time educating founders on what they're doing. And this is exactly why I think there's an opportunity to build a layer earlier than investing in advising. Like I could advise you, I can even make some introductions, but like you can get my help, you can get my access without committing to anything. I'm like, sure, if I have equity in your company, will I like it to like you? Would I like you to raise money? Like, yeah, if that's something you decide you want to do, yeah, like that's in my incentive. But because it doesn't cost me money to advise, maybe a little bit for like the shares, obviously, but like it doesn't really cost me money. I'm much more interested in helping you realize if this is a path for you. And if it's not a path for you, don't raise anything. Not my issue. Like I didn't invest money. It's like this is the value of the model. So what you just got, what your question is the problem of the industry. In both ways, there are founders that have studied the elements of raising capital and want to, but they're not in Silicon Valley. They just, they're like me. They've just like read it online. Then you have the people in Silicon Valley that just want to start a company because that's what you do. Don't want to find a job, just raise a couple million, and they don't realize kind of what's going on. And I do think there's an opportunity to flip this over the course of the next 10 years, not 2 or 4 years, but I think there's an opportunity to help a lot of founders and get stupid rich doing it. Like, I think this is like a total blind side of Silicon Valley and no one's doing it. And I'm like, I tried with Seed Scout, it didn't work out. I'm back at bat,
Yeah. Yeah. I mean, so many people think that company building is just, as long as you have the right idea and you think about the problems in the right way and you think about the solutions in the right way, then you win if you stay out at it long enough, which isn't always true, because if you have a horrible business, a bad business model, if you're hemorrhaging money, if you can't retain customers, then you can keep raising on that idea in some traction, but eventually you need to have a good business as well. And so, when you think about early founders who are just starting, it's easy to go full sail on the idea and building and all that. I mean, you have to get your ideas out there into the world and your product out into the world, but you also need to not be super slow to build a business out of that thing as well, because that's ultimately what's going to get you over the hump, or just fizzle out over 3 years of building and churning.
100%. And you'd be surprised how many people raise money, real money, good money from good firms that just have not thought about this. Like, it's this whole industry is wild. And I just think there hasn't really been a challenger to it, which makes sense once you're in it, and once you're LPs, like once you have LPs, you can't speak out. Once you're in the system, if you're relying on the person, but like everyone's relying on YC for deal flow, so they can't speak against YC. So then everyone just agrees with what's going on. What's great, I'm sorry, I'm kind of like tooting my own horn here, but I'm just like kind of stoked, is that like I've never, like, I get my own deal flow. Like, I've done this my whole life, or at least my whole career, the last 6 years in tech, and I just, like, no one has an incentive to do anything different from what has already worked. But what's working I think it can be improved. It's working a little bit. Let's be clear. I think the system works, but I think it'd be way better for everyone, including LPs, including GPs. I'm biased. I'm a founder too, right? I'm this crazy guy, but I'm not as crazy as I was. You know what I mean? Like, I've thought about this for quite a while.
Yeah, and if you want to talk about credentialing, being around and talking to thousands and thousands of founders over the years is an education in of itself and a credentialing of itself. That it's really hard to replace relationships. It's hard to replace just hearing people talk about their own ideas every day, all day. You identify the right problems if you do that enough. It's kind of like the 10,000 hours thing, like the 1,000 people.
Totally. But then you just gotta have like there's so many people try to work against the thing, and then they end up just joining it or churn out, and it's like, I don't know. I guess I kind of ended up finding a middle ground where it's like, when I started Seed Scout, I'm like, I want to disrupt all of VC. Like, today, I don't want to disrupt VC. I think VC actually is like a great thing. I want to like just build you mentioned this over email. I think I just want to like build a bigger front door, and I just want to like make it easier to get in. Not easy. Let's be clear, like, not easy. Like, getting number top 1% on the leaderboard, it's not easy. But like, oh man, if you knew what was ahead of you, if you were just getting started, you would join Arena right now. But if you're listening and you're like, you're just getting started, you may think you're closer and you'll have your own journey. And I hope that you are closer, right? But I'm just pretty, I don't know. It's like, it's such a wicked industry in some ways. But also very fun at the same time.
Yeah, and you're doing a great job of getting it. I mean, I found you on Twitter talking about it, so keep talking about it out in public, and we're super happy to be the first podcast you're coming on sharing your ideas.
100%.
And yeah, thanks so much, Matt. Appreciate your time. Thanks for sharing about Arena and the way that you think about the venture industry. Hopefully, it's helpful for founders, and maybe, I mean, we have a lot of founders advisors who listen to this, and in all different sectors and spaces. So yeah, great to have you on. Hopefully again in the future.
Yeah, thanks for having me on.
Thanks for listening to this episode of QSBS Solved. We hope to hear from you soon. Remember that the content shared on QSBS Solved is for informational purposes only and should not be construed as legal, tax, or investment advice. While we discuss strategies related to qualified small business stock, or QSBS, including rollover planning, listeners should consult their own tax, legal, and financial advisors before making any decisions. Laws and interpretations can change. Individual circumstances do vary.